Thank you everybody for coming. As we mentioned, thank you so much for being part of this conversation. I'm super excited. We'll kick things off. Tell you a little bit about myself. My name is Chris Ortega. I'm the CEO of Fresh FP&A. I run a global fractional CFO and advisory service company. We work with small to medium-sized business and provide that full CFO service to them. Prior to starting Fresh FP&A, I've spent over 20 plus years in accounting, finance, and financial leadership. Most of my background was building, shaping, scaling, and exiting companies. I've had the fortunate opportunity of taking three companies through acquisition. Most notably was a international marketing platform company that was based in Vienna, Austria. We built that company up and we sold it to SAP, which was one of the largest acquisitions and processes I got to be a part of. So excited for here today. And before I kick it off to Dan, we're going to have a real conversation here. Drop it in the chat. We like to keep this very engaging. So if you got a question, you got an insight, you want to drop us a fire emoji, drop that over in the chat. Ask questions as you get them. And Dan, tell us a little bit about yourself.
Thanks, Chris. Hi, everyone. Uh, my name is Dan Schonfeld. I'm the CFO and COO of ApprovalMax. I'm actually based in London, so we're doing this transatlantic. Prior to joining ApprovalMax about a year and a half ago, I was the CFO of various other SaaS businesses. Before that, I was a lawyer and then a management consultant and then in private equity for a few years. So I've been around quite a few blocks, but I'm doing SaaS finance for the last decade or so and having a really good time doing that. And yeah, super happy to be here and discuss this topic, which in my experience is a very important and sometimes overlooked topic.
Definitely, definitely, yeah. And when it never happens to us, and we're going to be talking about here today, closing the fraud gaps in your AP process. We're going to dive deep into that. And just to set the stage, right? A question I ask every CFO, every finance leader is, when is the last time you actually audit how your invoices get approved in your business and how it's supposed to happen and like what is actually going on in your business? Because we're in a pivotal time in the year right now. And I mentioned this earlier, over half of the year is gone. And if we're being honest about like the calendar and looking where we're at, we've got like August, September, and October. We've got literally 3 more months, 3 to 4 more months left in the year to really make an impact. And for me, I think CFOs are really thinking about right now is what are the lessons learned that we tapped from the first half of the year and how is that going to influence the second half of the year, right? I always look at the balance of the year for a lot of our clients and things that we do. I call it a balance of the year forecast. And that's what we're going to look alike. That's what we're going to be talking about here today is like, what are the processes? What are the need to knows? What are the what could go wrongs around your AP process that you can start fixing and building those foundations now to help set you up for success in first half of the year. Um, and also, this session is going to be very practical. This is about making and looking at your financial controls that are on that list, looking at the need to have, and also how do you prioritize your AP process? Fraud is a big milestone and a big center point, and we're going to get into some deep conversations. We're going to share some client examples. Dan's got an awesome like AI stat that I think is going to blow everybody's mind in terms of when you look at the fraud that can happen in AI. But that's what we're going to talk about here today, and that's going to be the primary focus on it. And also, you got to also look at the kind of macro factors that we're seeing right now. There's a lot of noise around economic uncertainty. There's cost pressure. In the U.S., we dealt with that whole tariff thing, and that kind of went through phases, and we haven't really got through that yet. I know for some of our retail and e-commerce clients, the tariff is a landmine situation. And we're just overall in just this unpredictable business client that we're all facing right now. And a lot of it for finance and CFO professionals, a lot of that stuff is outside of our control. We can't control the cost pressures, the economic uncertainty that we're seeing. So the whole goal of this conversation as a finance, CFO, accounting leader is to give you the absolute control that you can own in your business. And accounts payable are one of those key processes right now. I know in working with clients all across the globe that looking at the AP process and how that can inform some of the like the tariff situation that we've involved with, right? Like that's really helped us find, trace, and identify where some of those payments have been. So as we go back and look for that refunding process, we're able to have that. So because we have that process infrastructure, that's what makes it a lot easier to kind of go against some of these macro tailwinds that we're seeing right now. We've had a client situation on the tariff side where their tariffs have been months now, and the thing about it is like we've got no insight into that. So that's where we're looking at in terms of the external market. And then, not having, looking at clients that don't have these structured processes, that's what really makes a lot of these macro factors that honestly outside of our control. But when you don't have the processes, the procedures, the foundations inside of your organization, it makes that pain and that frustration of some of these factors that you just can't control even more impactful in your business. So that is kind of how we're looking at this session. Also, again, we talked about fraud, right? It's almost never, fraud is never a conversation that a lot of CFOs or finance professionals want to have. You don't really announce it. It's not something you go to your board or go to your business owners and your stakeholders and say, hey, we got a fraud situation. But in AP, that is a monumental situation that can happen. And most businesses, they're not set up to actually confront that or have the systems, have the processes, have the partnership, or have the procedures in place to mitigate that. So we're going to dive into that. One individual stat that I wanted to just give out just around fraud to set the context around it, to frame the fraud conversation, is that the Association of Certified Fraud Examiners, they estimated that organizations are losing up to 5% of their annual revenue to fraud every year. So if you look at that for a $10 million business, right, that's $500,000 of potential fraud that can be going on. And one of the most common entry points to that fraud that the fraud examiners mentioned, the AP process. So and the reason why it's process heavy, there's a lot of volume, there's email stuff, there's things that happen outside of AP processes, there's things on credit cards that happen. And a recent example that we've seen is a former strategist at Facebook was recently pled guilty to wire fraud after committing and stealing over $4 million from Facebook. So over 4 years, she was able to set up fraudulent companies. She was able to exploit their AP processes, have fictitious charges in there, and a company like Meta. Think about that. A company like Meta, with all the resources, all the capabilities, they didn't have the processes in place, and they weren't able to find this out for years after it happened. So that's a critical area, and it can range from small businesses all the way to enterprise level businesses that you see this fraud happening. And the most important thing to take away from this is that fraud is not only a finance core thing to mitigate, but it's also something to inform the business, right? You got duplicate invoices that can happen, miscoding of payments. You got approvals that are happening. Yes, there's some clients I know that are approving things via paper or a timestamp on an email. So how do we bring this all together? How does finance, how do we bring in technology? How do we bring in the business? And how do we centralize all of this to mitigate what those fraud examiners said of that 5%? So I know that's a lot of detail, a lot of stats going at you. Dan, how are you seeing these changes? What's your pulse on the fraud and impact that this is having across businesses?
Uh, Fraud has always been part of business, and it's always been a significant element. The problem is that typically people don't deal with it until it is discovered, and at that
Yep.
point you're firefighting. And the age-old wisdom that it's always better to do preventive maintenance and corrective maintenance, right? But the problem is, we're all busy, we're all stretched. We're all doing the BAU, and hardly anyone has the time or the presence of mind to stop and re-examine how they're dealing with AP processes. And this
Mhm.
actually breaks down to two parts. Part of it is having the right processes in place, but also having the right
Yes.
systems in place. Because
Yes.
if you don't have the right systems, not your process could be perfect, but it's supported by bad infrastructure, and then you're talking about timestamps on emails or paper or Google Sheets or Excel. They're like, okay, great process, but it'll break very, very quickly. And
Yeah.
the other thing to note about this, and this is, by the way, something we hear quite a lot from a lot of our customers, is Usually what happens is you set up the process and the necessary systems at one point in time when the organization is the way it is and it's a certain size and so on. And then things start changing. And that process, that setup, those systems were good for the moment at which you implemented them. But a minute, a week, a month later, the business changes, evolves, grows, transforms, and gradually there's a gap between the way you designed it and reality. And that gap creeps on you quietly, and you don't notice it. And usually you notice it only when it blows up in your face, at which point it's a bit too late to do anything about that. And so that's kind of the silent killer. And
Yeah.
a big part of that is to raise people's awareness that you should periodically re-examine what you've built and what you've implemented. Is it still fit for purpose, or has your business moved away from it to such an extent that it's actually not covering you well enough anymore?
Right, right. And the approval side of it, I think, is you kind of touched on that in the conversation, right? Is that approval is a big piece of it. That's like one of the major, like from a control perspective, this goes back to my Ernst& and Young days, right? But when I look at what could go wrong in internal controls in that process, that approval is a big part of that, right? Like,
Yeah.
and if that's done through email, if that's done through signing off on a piece of paper, and if that's not in a structured process, that can create a lot of issues. So I think we got a poll that pops up, and I'm curious to know from everybody else. We got a poll popping up. It should pop up on your screen right now. We'll take some time to go through this. I really want to know this one, Dan, from the audience. How are you currently handling your invoice approvals? And it's okay, guys. This is a safe place. So, like, it's okay to kind of go in and share what you guys have on this one. But we'll give it some time for people to kind of log into there. And then hopefully we get the results and we can kind of talk through that.
Yeah, but while
I,
people do that, one quick point, Chris, if you don't mind. I think I really liked your example about the tariffs thing because, having a good process in place and a good audit trail sometimes can help you in things you don't even imagine will ever happen. And something
yes.
like, a tariff being imposed and then later on being rescinded, and suddenly you realize that you're owed money, but go figure how much money you're owed. What did I pay? To whom did I pay? When did I pay it? It's like,
Yep.
I need this all in one place so I can go and claim what I was, overcharged with. But yeah, if you don't have the right systems and processes in place, this is like, weeks of work. So sometimes it delivers benefits you don't even imagine.
Facts, facts. And that was just to dovetail on that. And I think, I don't know if the results will pop up here, but just to dive into that a little bit more was that because we had that information for the tariffs, that was one of the first steps in the tariff process is you had to submit how much you paid, when you paid. You had to almost provide like an audit level support of all the supporting documentation. And that was the step one of that process, right? To even get on the radar to start going through the refunding process, that was step number one. And because we have the processes, the procedures, and the framework and the data centralized, it made step one is like, this is super easy to kind of go through. So, okay, here's the poll results. Okay, we got 33% of people that says over text or email. Okay, so that's like 1 out of 3. And then a dedicated approval tool, we got 2/3 of that in there. So that's insightful. I would, that's kind of what I see as well too. I would actually see for the mostly over text or the verbal sign off and no paper trail. I see in a lot of our clients, SMBs and growing organizations, they're probably 50% more there. So it's good to see a lot of people that actually have those approvals and that centralized tool around that. So, all right. So Dan, before we get into the specifics, I want to set something up because I think the context is really important. And this is where we're going to look at and where most AP actually leaks actually happen in a business. So the businesses are exposed to broken processes. You talked about this originally one, right? Coming from a startup in startups, most of the startup and scale up business I've been a part of, here's what you do. Most businesses start lean. There's a founder, there's like a bookkeeper or accountant, and then there's maybe like a AP person that's, office manager. You kind of, from a people perspective, you're building your business out for people wearing multiple different hats. AP is one of those processes. So the invoice comes in, somebody codes into your ERP system, and then that same person may code it and pay it. And everybody's working and the volumes become manageable because you're not, you're getting like 10 bills a month or you just have that. But then as the business grows, as you start to scale, you start to hire new people, you start to build out functionality, you start to increase your vendor relationships, that payment volume, that invoice volume actually increases. But the process itself, it just stays the same. Like people are still wearing multiple different hats, they're still routing these out through email approvals because nothing's gone wrong, right? So they've built this process and it's built with people to manage a certain, but as the business scales, that process doesn't scale with the business. I run a global fractional CFO, and I constantly see this with businesses. We'll come to a client, and one of the first things we do in our onboarding process is have an understanding of tell us your your approval workflows, right? How do you go back? How does an invoice come in? Where is it centralized? Does the invoice just sit in someone's email box and it never gets to a dedicated email address? Or how does the approval process work? Is that like on a weekly basis? The thing that I find out we're working with most SMBs is that there's an owner and he says, Chris, you know what? Every Friday, I look at my email list, I save this email in there, I go into this folder, and I make payments through the bank from based off of my email. And that is their entire AP process, right? And you ask, well, okay, this is how you've done it for your business. And maybe it's a business that's been around 20, 30 years. And they're like, oh, yeah, that works for us. That's always been our process. It's never had any issues. And I know my email box that goes in there. And I know if it goes in this email box, it's approved. So that's typically what you see. And then as the business grows, as volumes increase, that process doesn't scale. So Dan, when you come from this grow, you grew it, the process grew up in habit, and you've gone from a small to almost a scaling organization. What are you seeing in terms of some of those pitfalls and those leaks that happen with those scaling businesses? What's your thoughts?
The typical pattern is exactly as you described it, right? I mean, something gets put in place relatively in an early stage of the business, and at that point in time, it's adequate, and the people in charge can tick the box mentally and say, "Yeah, we've done what needs to be done. We have something. It works. It's all great," and then we move on, right? And in that sense, it kind of gets forgotten, and you keep running it in the background the way it's always been. And I mean, when you think about it in those terms, you know, uh, AP approvals are a bit like insurance, right? You only realize that you need them when it's too late because something's already happened, and somebody, I don't know, scratch your car or whatever, and say, "Oh, why didn't I buy insurance for that?" So it is basically insurance, but if you wait until the damage realizes itself to buy it, then the horse is already gone, and by the time you close the barn doors, right? And this is actually, I mean, the point about scaling is a very valid one. And I think this is the whole genius of the insight that the founders of ApprovalMax had about 10 years ago, when they realized that there isn't really a robust, flexible solution for AP approval workflows for SMBs. There were very good solutions out there as part of ERPs for large businesses, and they work really well. They still do. They're expensive and SMBs can afford them, right? Now, the governing thought was, hey, this is software. Software doesn't need to be expensive. Software is eminently scalable, right? So you build it once and then you roll it out to thousands of SMBs. And you give them enterprise quality approval workflows at a price that is affordable to an SMB. And you also build in the flexibility to allow them to change it as the business transforms and grows. And that's the whole idea behind ApprovalMax as a product so far. Now we're taking the next step, which is we're building AI into it to also evaluate how things change and flag to you as the owner, hey, things have changed. You may want to adapt this process or that process, change that approval level, and so on. And it becomes more interactive. It doesn't wait for you to figure out that things have changed and you need to adapt. It flags it to you, which is the next sort of step in the evolution.
Nice, nice. And I love the point that you mentioned about where, it talks about the approval work, like you get the enterprise level approval for S, like that was a golden insight that you had there, right? And what I see with clients, just in addition to what you said, is that one of the key things where I see where approvals break down is like there's really no segregation of duties. And yes, I'm putting back on Ernst and Young, Sarbanes-Oxley 404 testing when I did internal controls. And one of the key things we would talk about is segregation of duties. And I'll walk into a client, Dan, full transparency, and I'm like, tell me your segregation of duties when it comes down to your AP process, right? To me, that's a fundamental. You should have a person that could code, and that same person shouldn't be the same person approving and issuing payments, right? And I talked to that CEO, owner, and founder of that business. Is like, oh yeah, like my bookkeeper, she codes it, and I send her what to get paid, and she goes and pays it. And I'm like, one initial value add is there needs to be a segregation. So as we come in as your CFO to manage your bookkeeper and manage your finance function, one of the clearest things that we're going to implement is a segregation of duties. And I walked them through that to say, yes, your bookkeeper will be responsible, or your staff accountant, or if we're taking over accounting, here's how we mention and how we have segregation of duties. This person, this is their scope. They can only review, they can only approve, they can only add insights. Their baton stops when it's entered into the ERP, right? And then from that moment, we're going to be working directly with you on the payment aspect of that. And then one thing that I find fascinating is like segregation of duties and that simple workflow, just separating who's doing what and not having one person do the exact same thing. It's a huge unlock for these businesses. And that ties exactly to what ApprovalMax provides, because you get that enterprise level segregation of duties, control, the a level of where you can actually customize out that approval workflow and set it up for your business, and it's set up and running. And I think like that's a big element that a lot of growing businesses just don't miss, because it gets back to, well, it's never caused any issues. Like there's no
Yeah,
problem. It's the classic, if it isn't broke, don't fix it, right?
exactly,
It's
exactly.
that
But
classic analogy around that. So diving a little deeper in terms of the approval breakdowns, where have you seen it, Dan, in your experience in your SaaS businesses and other areas that you've managed as a CFO? Where is that one point where you say, man, here's where approvals typically break down based on my experience? What's your thoughts on that?
well, there are several examples, but one thing that comes to mind, which I've seen very often because I've done a lot of work with founders and business owners over the years, and it relates exactly to the point you just made earlier. You need to think about how it all starts, right? And typically, in my experience, there are two types of founders or business owners. There are the ones that are completely hands-on; they want to do everything themselves. And so the whole cycle runs with them. They get everything, they review everything, they check everything, they approve everything, they pay everything. They don't trust anybody, right? Now, the problem with that is it's not scalable. As the business grows, and hopefully it does grow and succeed, things start to slip, because at the end of the day, you're managing a business, you don't have time to do all of that. But because you're inherently not trusting anyone else to do that, then you become the problem, right? And because it happens slowly, this is like the parable about the frog boiling in the water, right? It ramps up gradually. You don't notice, but at some point it starts breaking, and you don't even notice that it's breaking because you just don't have time to do it properly, right? The other type is the type that doesn't want to deal with it. He just doesn't. He hates it.
Yes.
And then they just, from the beginning, they say, okay, either they have an outsourced accountant, bookkeeper, whatever, or even if it's an internal finance function, it's just, you guys deal with this. This is admin, this is red tape, this is bureaucracy. This is not for me. I didn't start a business to do this type of crap, right? So I'm hands off, right? And then the whole cycle runs with somebody else. And again, there's no oversight, there's no control, there's no four eyes principle. And at some point, it stops scaling. So usually what happens is one of those two dynamics play out, and you end up in a situation where you have something that is just not safe, because there's one person doing the entire loop. Either it's a business owner or the founder, or somebody else in the finance team, or even an outsourced professional, but it's all with them. And I'm not assuming any ill will. I mean, I'm not assuming people, I mean, people make mistakes. It happens. Nobody's perfect, right? And you have four eyes,
Yeah.
six eyes, eight eyes, then the probability of catching those mistakes drops dramatically. But if you have just two eyes doing everything, then something will blow up at some point.
Yeah. And Dan, I love how you painted out like the CEO, owner, and founder super hands-on, or the CEO, owner, and founder that's like, get this away from me. And here's where I think this comes together in terms of a tech stack, right? Is yeah, you can be that CEO, owner, and founder that wants to be hands-on, but be that hands-on, implement that, lay out your process inside as a centralized tool, right? Like, don't try to be hands-on by trying to have like email and like a lot of times for those hands-on CEOs that we work with and owners, they try to like band-aid a workflow, right? Like they'll be like, okay, well, if this email pops up in here, I'll use Power Automate to do this. And it's like, why are you trying to build out infrastructure when you can just go to a centralized tool that from day one has enterprise level approval workflows for the SMB price, right? So the technology I think sits in between both that hands-on or hands-off owner and founder. Because yeah, you can be hands-on, but be hands-on in building out a tool to centralize that workflow. And if you're completely hands-off, it goes the same way. So I love how you filtered those out between the two and right in the middle of that CEO, owner, and founder. And maybe as a finance professional, I'm curious, drop it in the chat, like which one of the founders are you working with, right? What is your CEO? Is he hands on or hands off? But that's where that tech stack can sit. Because
Yeah.
now you've created to say, I'm not, if I'm all hands on, I'm probably going to figure out a way to do this and I'm going to just use the tools that I know and I'm going to build a Frankenstein AP process through Outlook and all these other things, right? And if you're
Yeah.
hands off, you're not even thinking about that. You're like, I'm going to give it to my office manager or my VA or my administrative assistant because I don't want to think about this finance stuff. Like, I'll let somebody else figure that out, right?
Yeah.
When you have both paths, the best place is land on a technology to land and expand, right? Because that technology is going to grow with your business, right?
Yeah.
So I love how you broke that out, and I think another area that I see just in my work, just not only as a CFO but actually with clients we have at Fresh FP&A, is I think another gap in where AP processes kind of leak is when vendor bank details change. This is a big one, right?
Yeah.
Right now, you get that. Let's just, you walk through an example. I have a client, they get the same rent bill every month, right? Like literally had this. They get the same rent bill from Lost Fixtures every month, and they got a notice in the mail, and they's like, hey, Chris, the bank information for our Lost Fixtures is changing. It's moving from Chase, it's moving to Bank of America. We got a notice on it, we got an email. The first thing that we did, and this is probably where a lot of finance organizations don't do, is we went and go validated that information. So we made sure the email was correct. We reached out to the partner. We validated the account before we made that bank change in our system, right?
Mhm.
We validated that this is correct, that this is the right person that is coming from, that the banking information is right, it's tied. We went through a lot of validation checks to do that. But this is a
Mhm.
gap. Most people they get a bank change and in the prevalence of phishing and bad actors that could do this stuff, you could be making that bank change, coding that same rent invoice for the next 30 years and have no idea that that's going to a fraudulent account. So,
Yeah.
Dan, in your experience, what are your thoughts around the fraud risk, specifically around this vendor bank changing detailed information?
Yeah, it's definitely a common one that recurs quite often, and I think there are two elements to this. I mean, first, you don't always get notified. I mean, sometimes vendors just
Yes.
change their bank details and they submit an invoice with new bank details, and you don't get formal notification or a letter saying, "Hey, so there's no trigger or there's no obvious trigger to go and do the validation." And this, for example, is one very, very useful feature in our product, which I use myself, obviously, all the time, where whenever there's a little discrepancy in bank details, it immediately flags it as there's a warning sign saying, okay, bank details have changed. You need to take a look at that. But even if you do get a notification, as you say correctly, and especially nowadays in the days of AI, it's very easy to spoof these things and to make them look
Yes.
super credible, right? And then you do have to go and check. But and the thing is, we're all professionals, we're all experienced. We know that we have to go and validate, but it comes in and there's a million other things you need to do, and it gets put on a pile somewhere or on a list, and sometimes you forget or you don't get around to it, or it just slips your mind, or other things, urgent things come and take up all of your bandwidth, and sometimes you don't do it, right? And then you forget and you just approve it and you pay it, and you're paying to the wrong person, you're paying to the wrong bank, and you've basically been had, right? And
Yep.
here again, it's very useful to have a piece of software that flags it to you as a warning, because it's a lot harder to ignore. It's a lot harder to forget, because it basically asks you, have you validated this? Now, of course, if you click yes, I have validated this, and you haven't, the warning will go away. Most people won't do that. Most people say, "Oh, right, I needed to validate that. Maybe I should go and do that now." And that, no solution is perfect, but that I think closes the gap quite significantly.
Yeah, and I kind of mentioned this example earlier with the Facebook example where the strategist at Facebook stole the $4 million over 4 years, right? Like one of the things that was in there, and I did like some investigation and like read this article, and it was like and what you just said would have been able to identify that. Basically, in that example for the strategist that had the fraud and basically I took that money, is that she set up multiple vendors, right? So she had all these different vendors that and this is where segregate, and this is meta, guys. Like this is like this isn't like a like a company nobody knows about, right? Like she was able to set up these multiple entities, right? And each of the entity they had different names, different billing addresses, all that. But the commonality amongst all of those is the banking details were all the same, right? To me, that immediately screams a process workflow where it's like if I have multiple vendors that are 5 vendors and all of them have the same banking details, right? That's a flag to say there's something that you should look into this on, right?
Yeah,
And that
absolutely.
was part of their process that wasn't there at all, right? So that to me seems like a great functionality to look at and say, hey, how to validate this banking information, but also is there other banking information that is similar across different vendors? If that
Yeah,
one thing, and if that was a tool and they leveraged and used that, that would have quickly identified that, right?
yeah, yeah,
And that's where I think ApprovalMax knocks it out the park because it says like, hey, this stuff has changed, or here's multiple vendors with the same banking information.
yeah. Exactly right. And the other way this is often done is you basically create a fake vendor which has the right name and the right address and the right everything, just different bank details, right?
Yep.
And it's easy to miss, right? It all looks the same. The invoice looks the same. The amount is the same. All good, right? Except the bank details, minor technical detail, right? The system flags it and says, "Okay, bank details have changed. Are you aware? Did you expect this? Did you check this? If not, maybe you should." And 9 times out of 10, that's enough to catch.
Yes. And when you're a growing business and you're moving fast, that proactive alertness to that's exactly as a CFO, that's what I love. I love
Mm.
like proactive insights. I
Yeah,
call them like prescriptive insights, right? It's giving me something before I even know that it could be an issue, which
yeah,
I think Approval Max doing that for finance, CFO, and accounting professionals, huge value add, right? And this ties back to what we mentioned earlier about like if you're the owner all in or the owner all out, like inside the tool, it's already giving you that information. So you don't
yeah,
have to go ask somebody, you don't have to go think about it, you don't have to go build a workflow to say, how does it alert me, or how do I build a Frankenstein process to do that? You
yeah.
get all of that functionality inside the tool itself. So
Yeah.
uh and and the
If just to
reality is yeah,
go ahead, sorry, but
and the reality is that once that money's gone, Dan, the
yeah,
time, energy, effort, and just credibility is gone, right? Like if you sent and if you sent out if you sent out wrong banking details and that money's out, like think about like now you what became a simple problem that you found, now you have to evaluate all your vendor base, right? And it
yeah.
becomes frustrating, it becomes time consuming, but with the technology, it becomes 100% preventable too.
Yeah, well, nothing's 100%, but it's
Yeah.
very close, definitely. And I think there's another. So two things. One is I think there's another price that to add to the list, which I completely agree with, and that's the personal price you pay as a finance professional,
Yes.
your
Totally.
reputation, because we do our jobs day in day out, and we build our reputations inch by inch, and it gets built slowly, but it gets destroyed very quickly.
Yep.
One thing like that happens, and you're back to zero. So
Facts.
all of the brand you've built for yourself over years of careful hard work of checking everything and making sure everything ticks and ties, suddenly there's a big question mark above you, like, can I trust anything that's coming from this guy's department? So, and even if you get the money back, and even if you do all you screen all your vendors and you find other things, that doubt, it'll take a long time for that doubt to go away. So that's sort of on a personal level. The other thing to mention very quickly is just if you love what the product does now, you love even more what it is going to do in the future, because in the future it's going to be expanded to look at things like timing of payment. So is the invoice is there a pattern that's breaking? So let's say you have a vendor and they invoice you every month, and suddenly you get a fake invoice that's in the middle of the month, or the amount is different. So it's not just bank details. It's going to look for. I mean, at the end of the day, AI is great at pattern recognition. So it's going to look for a pattern, and if anything steps out of that pattern, it's going to flag at you and say, "Hey, this looks suspicious. It's not the right timing, or it's not the right amount. You need to look into that." So that's proactive.
Yeah, Dan, the personal cost that you put on there is like the trust and credibility. And I mean, like that's never happened to me before. Let me knock on wood, right? But like just the hyper awareness you're gonna have with that, right? And like you said, that trust is built, and us as CFOs and finance professionals, that we're just stewards of the money. Like our number one thing is to make sure we're safeguarding the assets of the business, cash being one of those. And when that fundamentally breaks, not only is the trust lost in you, and you have to rebuild that, but that also creates like a reactive nature inside of as a finance professional. Which kind of segues to my next topic is, we talked about scalable businesses, right? And a lot of times, as I mentioned before, when you're scaling a business, you kind of allow that foundation, but as you begin to grow and scale, that same foundation stays the same. I think of it like a house, right? You initially build the foundation of that house, but then as you start building everything on top of that, you don't go back and look at that foundation. So workarounds become actual process, right? And what may have been a temporary fix that you've implemented inside of your finance process 3, 5 years ago, and you had a bookkeeper doing it, as you grow and scale, now you've added a bookkeeper, you've added a staff accountant, you've added a controller, you've added a CFO, you've added tax, you've added all this infrastructure around that, but the workarounds are still in there. And they're not necessarily built from a malicious perspective, but they're an invisible part of the framework that hasn't scaled with the business. And you haven't, as a finance professional, taken the time to tie that back out to say, hey, we've reached, we were one person before managing finance. Now we're a team of 10. How should we be thinking about evolving and looking at our processes to move away from temporary workarounds that we established early in the business when we are a startup? We're now a scale up business, and we need to get more sophistication in our processes. Maybe we have audits that we have to do now, and our auditors are asking us about our internal control framework and processes. So, Dan, a question to you, and I'm curious to get your insights around this, is how can CFOs move from having this workaround foundation and processes to move to more scalable processes as they grow, as they bring on more people, and as the complexity in their business increases? How can they move? How can they make that transition?
A good question. Effectively, what you're talking about is what I usually, sort of in my mind, refer to as finance debt. And by that, I don't mean debt
Financed
to
it.
a bank. I mean by analogy to tech debt, right? Because I come from technology, so every technological product you have out there, every software product you have out there, there's always tech debt, which is the stuff
Yeah.
that you should have fixed, but you didn't fix, usually because you didn't know you need to fix it. So, all kinds of bugs and things that, and you're so busy running forward and growing and scaling that you don't have time to fix it. And usually what happens is you only fix it when it blows up, when the product stops working, or you release an update that it makes everything crash and so on. Now, sort of common wisdom in the industry is that good CTOs spend about a third of their time and the team's time on dealing with tech debt. You identify it and you deal with it so that you prevent it, hopefully, from exploding in your face at some point. I think CFOs and finance directors need to do the exact same thing. You need to be very disciplined about this and say, okay, I'm going to use part of my time to re-examine the stuff that's been built and his legacy and has been sort of lurking in the closet for months or years, and see whether it's still fit for purpose. And that's just part of it, is just setting that intention, making yourself aware of that. There are two other things that I found very, very useful. One is to keep your eyes and ears open for new solutions that are coming on the market, because often these
Ooh.
solutions talk about pain points, and you try to understand, okay, this interesting piece of software, what does it do? And then you investigate that and say, you understand what it does and say, hang on, we could have that problem, and I'm not even aware that we have that problem. I haven't looked into this in the last, I don't know how many months. Maybe I should. And it's not necessarily that you go and buy that product, but by listening to the pitch and learning about that product, you suddenly realize that there may be an area that you haven't looked at for a while, and maybe you should go back and re-examine that. And the other thing which I very religiously do is, you talked about team scaling up, right? So 1 person to 10 people, right? Every new person that comes into my team gets a blanket invitation to basically question everything, re-examine everything. If they
Ooh,
look
that's
at stuff,
fire.
I very explicitly tell them, and even if they don't report directly into me, this is like the entry level briefing. Yeah? You're going to learn the job in the next month or two. I want you to be very, very critical about what you learn. I want you to ask yourself, can this be done better? Can I improve this? And sometimes you get completely harebrained ideas. And sometimes people talk without knowing what they're talking about. Yeah, so there's a lot of noise. But in that noise, there's often signal. And sometimes people come in from the outside, previous experiences, or just common sense, and they say, this isn't working right. This should be working better. You have a problem here. And sometimes, new eyes see stuff that old eyes don't.
Dan, that like you said that and like bringing in a new person to critically look at the business and say like, no, like I want you're gonna learn the job, but also I want you to come back and bring that fresh insight, what you've learned and what are things to be better. Like that's a huge unlock, and that's not like tool agnostic. That's like tool agnostic. That's great people leadership to bring in, kind of like, hey, I've had different experience. I may have looked at different tools, or here's my research that I've done, or here's where I see the technology going, and bringing in that fresh idea to kind of move away and reevaluate whether some of those foundation processes to bring in that expertise, that knowledge, and that experience to say, how do we go from workaround to scalable processes? So I love that insight. I'm gonna remember that. That's a golden nugget for all those CFOs, finance professionals. When you're bringing in new teammates, not only should you be teaching them, but they should be teaching some areas about your finance organization that could be better. So
Yeah. But
awesome. So
just
we
to
talked
mention on
about
that, just to mention on that
yeah,
very
yeah,
quickly, Chris, there is a price. It requires patience, because this is going to be inherently some of it's going to be a waste of your time, because there's always that attitude of, I've been there, done that, I know,
yeah.
I know this stuff backwards, right? What are you going to teach me that I don't know, right? So you need to let go of that. You need to be a bit more humble, and also you need to come at it with a bit of patience and say, okay, I'm going to talk to this person 2 months in, they're going to tell me a bunch of stuff about how we should do better. Probably 80% of that is going to be useless, but it's worth it for the 20% that isn't.
Yes, yes, yes. And that patience, and then you're hitting on a great aspect for me. I know me, patience is if I got that interview question and it's like, Chris, what's a skill set you could work on? Patience. But this teaches you that, right? And it teaches, and also I think from the teammate perspective, right? And like you said, it's 80-20. A lot of that's gonna be like, yeah, I hear you. We're doing that. Great, great, great. But that 20%. And if you're able to take that information and implement it, and when I lead my finance teams, I'm telling them, it's like, hey, you've got that 20%, go do it. Like, how can I enable you? How can I support you? What do you need from me to take that valuable insight to go scale our finance processes and like go do it? Like, give them the framework to be able to do that. Like, not only for coming on board in a new finance team in a new role, maybe it's a promotion for them, but that gives them that opportunity to provide value and provide insights. But as you mentioned before, it does take patience around that. So,
Yep.
uh, cool. So, we talked about the AP leaks. We hit upon the approval workflows. We talked about the workaround processes. You gave some great insights around that. Before we get into solutions, I want to talk about some of the riskiest assumptions that in finance we typically make, right? And it's not necessarily around the technology or the budget that we have. Sometimes it's the story we tell ourselves of why fraud and why this stuff wouldn't apply to us.
Mhm.
And one of those risky assumptions that I've seen in finance is that, we're too small to be a fraud target, right? I heard this from business. We got clients from $1 to $50 million, and they're like, Chris, That fraud is for the bigger publicly traded companies. That's not going
Yeah.
to relate to us. Nobody's trying to look at my $12 million professional service company and try to fraudulently get information from us.
Mm,
But
mm.
my key insight around that is like size is not always the protection around it. If your processes don't grow with your organization, it's like an open invitation for fraud, right?
Yeah. Yeah.
And then also for smaller businesses, they're often the easiest targets because and the reason why is they don't have those controls. They don't have that infrastructure. They may have that CEO that is fully hands off, and you're managing your $12 million AP process, right? You're a $12 million revenue business. Let's just say you're at least going to have, like, if you're professional services at a 30% margin, you're going to be running $8 million through expenses, and you've
Yeah.
got $8 million of that business that is being ran by someone that has no AP experience, and their day job is also ordering coffee, they're booking meetings. So
Yeah.
this we're too small to be a target becomes a very risky assumption in finance. So,
Yeah.
Dan,
Agree.
what are your thoughts on being too small to be a fraud target?
Well, two things, and I'll be brief. One is that it's a fallacy. I mean, in absolute terms, of course, you're right. I mean, a small business would not be defrauded out of $50 million. They don't have $50 million. But if you look at it in terms of percentage of revenue, there's a very interesting stat about this from the ACFE, and they're actually proving that in percentage of revenue terms, small businesses actually lose more to fraud than larger businesses, exactly for the reasons you mentioned. So, yes, you're smaller, but you're also less protected and you're an easier target. That gets multiplied on steroids with AI
Yep.
because AI makes it easier to do a lot of things. AI makes it easier to defraud you. It makes it easier to basically create the artifacts that are needed to get money illegally out of a business. And there was a stat you mentioned earlier that was released recently by Deloitte, and they're estimating that AI-enabled financial fraud is projected to go from $12.3 billion this year to 40 billion next year.
That's
So that's 3 times as high. So, like everything with AI, it's moving very quickly. Unfortunately, this one is not good news.
yes. And that like when you think about AI and like everybody, I mean, I'm pretty sure drop in the chat like your AI, right? But like AI is becoming, and I've always looked at any technology, specifically AI, is like, yeah, you have the great use cases, right? You have the automatic workflows that it's able to see. You have the pattern recognition. You have an ApprovalMax where it's able to decipher the banking detail changes, right? So you have all these great use cases around where AI is enabling CFOs to actually do their job better and be more efficient, right? But
Mhm,
there's also the other dark side of the AI, right? You've got
mhm,
phishing. You've got in Gemini, ChatGPT, and some of these other tools, you can actually create fake invoices. Like I did a conference with the AICPA, and we were using
mhm.
Claude. And one of the things that we talked specifically about fraud and how it can happen. We were able to actually create a fake invoice that looked exactly the same. We had Gemini create the invoice. It looked exactly the same, right?
Yeah,
And if you get that invoice and if you're running that process, it's not centralized and that comes to your email box and you're just like, oh yeah, I've seen this invoice before. You click approve or you click that link to download that invoice, right? There's so many ways that AI is helpful for CFOs, but it's also AI can definitely be that, and that's not surprising that Deloitte statistic increasing 3x because if you look at the level of AI spin that's happening, right? People
yeah,
are
of course.
exploiting that. And that's a huge risk for CFOs because it's like you can't even tell the difference that this came from the right email. The image looks exactly the same. There's no watermarks on it. It's like
Yeah,
the ability to be able to create these fake instances or these fake financial records is a huge risk for CFO.
yeah, absolutely. Look, in a nutshell, AI is a technology. It's a bit like nuclear technology. You can make bombs with it, or you can make clean power for people with it.
Yep.
It's not inherently
Yep.
good or bad. It depends on how you use it, right? The thing to
Exactly.
understand is that it's here. It's not even
Yep.
coming. It's here. And it's affecting everything. And as finance professionals, if we don't get on top of it, it'll get on top of us.
Yep. 100%. 100%. And a client example that I want to share, just talking about like we're too small to be a target. I actually had a client at Fresh FP&A. They had no formal AP workflows, approvals. Like it was one of those owners that was like completely hands off. They gave their entire workflow, no segregation of duties, no approval processes. Things were done over text. And ultimately, what happened with the client that we brought on board, and I remember it was like, it's honestly, Dan, this is in the first week of the onboarding. I had that call, and he calls me. He says, "Chris, I know you're coming on board. We're looking forward to bringing your team to help us scale, help us grow to the next level. But I have to tell you what happened in our business, right? Their bookkeeper stole $500,000 from their business, right?
Mm.
And it was like first week of a call, right? And like we go through everything, and I'm like, wow. And immediately that was, how did this break down? Like, and he told me through the processes, like we didn't have no workflow. I trusted this person. He was an owner that was like, I don't want to be involved with it. I trusted them. I gave them the empowerment. They had no protocols, no procedures. And that bookkeeper, and there's current litigation going on right now of like how that owner can recoup his $500,000 that he invested in there. And
Yeah.
the thing about this one, it wasn't sophisticated. It wasn't like a fake vendor or any of that stuff. It was, there was no infrastructure. And it completely highlights, Dan, that was an owner that was like, I'll keep it hands
Yeah.
off. I don't want to be involved with it. But they had no scope around that piece of it.
Yeah.
And
And
this leads the example of like, man, you got to have these processes. You got to have these workflows. You got to have, I always say, you got to have the right people in the right seat, doing the right level of work, providing the right level of value in an organization. So,
yeah, I
um,
agree.
it,
It's a great story, and it really highlights what you need to have good approval processes in place to
yeah,
have to manage your AP correctly. I mean, yeah, you always need the right people, but that's easier said than done, right? But the things you have more control over is they have to have the right tools or systems, and you have to have the right processes or approvals. And that needs to be structured, that needs to be clean. You have to have segregation of duty. You have to have systems that allow you to identify any change or anything that's weird or unusual or smells like something fishy. And if you put all of that, and trust is great, you need to trust the people you work with, but trust and verify, don't trust blindly, right?
100%.
So you have all of that, you build all of that into a system, and in essence that is what ApprovalMax is. It's a system that basically captures all of these different elements and gives it to you as a software package that you just put on top of your general ledger, and that's it, it runs.
Nice, nice. Yeah. And Dan, we talked a lot. So we talked a lot of doom and gloom. We gave a lot of great examples. That AI statistic that you mentioned from Deloitte increasing 3x is wild. But I kind of want to move into like, what does a good control environment actually look like, right? We talked a lot about the non-perfect. I loved your analogy of how the CEOs fall out between all hands or not hands-on. But
Mhm.
if you were to paint a picture, what does a finance team that has good AP processes, what does good and what does great look like for CFOs and finance professionals around their AP processes?
So, as mentioned, I mean, you need to have very clear processes. They need to be structured. They need to be known and understood across the business, ideally documented. You need them to be broken up into concrete steps where different people do different things. So again, segregation of duty, and the limits and the pathways need to be very clear and structured. And it needs to be run on a system that's smart enough to identify anomalies and flag them to you proactively. So if anything goes wrong or even looks remotely suspicious, it immediately stops everything and says, "Okay, you need to look at that because that's off pattern." And again, in a nutshell, I just described ApprovalMax. That's what it does basically.
Nice. Yep. The segregation approval workflows, the segregation of duties, the vendor change process, the AI that you talked about. I think if one element that I could add for those CFOs and finance professionals of what great looks like is that and this doesn't even have to do with the finance organization, right? It has to do with how the business engages with the tool. If it's user friendly, if it's easy for them to do, and you talk to your business partners, maybe it's in sales, maybe it's in marketing, maybe it's in IT, and they talk through their processes of getting their bills, getting payments approved, and they're like, "Oh yeah, that's like easy. All I got to do is do this." And for the business, if that's easy for them, there's no pain around it. but also on the back end, it's like the Wizard of Oz, right? Like I can make everything so easy and paint this picture that is so easy and it's the yellow brick road for you. But I'm
Mhm.
behind and I have the governance, I have the control, and I have the ability to have those proscriptive insights. To me, that's what a great process is. And I think if
Agreed.
you're looking for a tool or technology that has that enterprise level structured approval workflows, that is able for your business, irregardless if you're hands on or hands off, to have those industry standard segregation of duties. And then also the anomaly detection, the banking detail changes, the verifications that you need to proactively run your business. Highly recommend checking out ApprovalMax. That is the core fundamental firestones and pillars that ApprovalMax has. So I think yeah, that is definitely the piece around where I think great looks like. Um, Dan, we got 3 minutes left. I know this has been a great conversation. Time flies by. I feel like we could talk about this for hours. But one thing I want to leave with everybody is you're looking at this, maybe you watch the playback, you're on the chat right now. What is that one thing that CFOs, finance professionals can do right now that can make an immediate impact in lowering the risk of fraud in their AP processes? What is that one thing that can you focus on, Dan?
Go back and re-examine your assumptions. You're
Mm,
more than likely going to find out that you are effectively sitting on top of a legacy system that hasn't been refreshed in quite some time because who has the time? And there are always more important things. No, this is important, and you need to carve out the time to do that. So, seriously, go and re examine how things are set up right now. You will find things that will scare you.
nice. If I was to answer that, the one thing you go look at, think about how you scale. Always think about scale in mind. I do that with everything I do. Anything that I'm doing, I said if this becomes 10x, how does this process, how does this outcome, how does the result scale? Be thinking about scale from day one. That would be my great insight around that. So
Agreed.
I know we have 2 minutes left. This has been a Dan. Thank you so much for your insights, for your conversation around this. There's a poll on your screen right now. If you'd love to learn more about ApprovalMax, smash that yes, please. Everybody should be hitting that. I'm like spamming it right now, hitting yes. And if you'd like to learn more about ApprovalMax or sign up for a free trial, make sure to check out ApprovalMax. There's a website link in the chat. And I know we didn't get time to get to questions, but Dan, if people want to learn more about you or reach out to you, ask any questions, where can they find you?
LinkedIn, I'm always available.
Awesome. Same
Happy
for
to talk
me.
to anyone.
Same for me. If you enjoyed it, follow me on LinkedIn, connect with me. I'm happy to share insights, all the lessons learned. I think providing value that you guys have got from this conversation is that's what I'm all about. So if you want to learn more, there's actually a trial link in the chat. That'll be going out. And just as another housekeeping thing, this recording, this information, this will be going out to everybody that joined the webinar. You'll be able to have that. And if you have any questions, clarifications, any things that you wanted to mention, feel free to drop it in a message to us. Dan, thank you so much. I know we did the pre-calls for all this stuff. I've enjoyed this conversation. Time has gone by so fast. Thank you so much for your insights. Thank you so much for your expertise. And I appreciate everybody joining.
Thank you very much, Chris, and thank you very much for joining. It was a pleasure.
Thank you.